Joining me now here for a one-on-one interview from the New York Stock Exchange is Chris Versace, the Chief Investment Officer of Tematica Research. Let's start with the fun stuff. You were in Aruba.
Yes, I was.
Talk to me about the purchasing power that you experienced traveling to a place like Aruba.
I would say it was pretty good, right? Nothing out of the ordinary. What surprised me most, you would think that when you travel today in this increasingly digital world, you would be mobile payments, tap to pay, what have you. Afraid not, my friend. Cash, which when we got to the hotel, I had to run inside and hit the cash machine because I don't carry cash. So anytime we had to get around outside of, the feet as our mode of locomotion,
Sure.
we needed a cab to the airport or someplace we wanted to go, cash. That was the biggest surprise.
The greenback, specifically.
Correct. There is some local currency, I think, but
Yeah.
Did they want dollars? You bet they did.
Right. Still the dominant reserve currency, and you can see that when you travel.
Correct.
Absolutely. Atlanta Fed's last GDP Now figure shows the economy growing at 3%. First of all, how much stock do you put into the Atlanta GDP Now figure, and is 3% too high?
So you have to remember a few things, right? I like the folks at the Atlanta Fed, but this is a rolling GDP forecast. What does that mean? As each economic data point that you and I would analyze, put through its paces, is published, they update their model. So it's not a true forecast, okay? 3% based on the data we've seen so far, pretty good. But remember, we're about to enter a data-filled week during the 4th of July week, right? So everybody's focused on, the May PCE report, and I understand we'll get that, and we'll want to see confirmation for May CPI and PPI. Great. But the June data is what's going to matter more as we get ready to close out the quarter, get ready for June quarter earnings season, and update those GDP forecasts. So when we get it, the June ISM PMI, manufacturing services, what does it say about orders? Leading indicator for what we'll see in July, potentially August. What does it say about employment ahead of next Friday's June employment report? Most important though, what does it say about prices, leading indicator for what we will hear in the June CPI, PPI? That's going to be important.
What's your single favorite piece of economic data we get every month?
Truth be told,
Yeah.
none.
None of them.
I don't have a favorite one because there's no one that tells you everything you need to know.
Okay, I got
So
you.
you've got to be like
It's a mosaic. They come together.
I prefer tapestry, but sure.
Love it.
Sure.
Way to go. Awesome. What grade would you give the U.S. Federal Reserve so far in the ongoing fight against inflation?
I'm going to answer this two ways. My grade for their performance is probably an A-. Okay. I think they could have started a little earlier. I think they were off on transitory, that's not exactly a unique thought. But I think that they've communicated what their plans are relatively well. I think they're being mindful to the evolution in the data. The market's expectation, I think, for Fed rate cuts got a little bit ahead of itself, no surprise. 6 cuts expected in January, right? The reality is we'll probably get 1 before the end of the year. We'll see, probably 1. But even when Powell was talking during the May CPI report as part of his latest presser conference, if you read the data carefully like you do, like I do, that core CPI on a month-over-month basis hit 0.2% in the fall of last year. And that's when the market got all excited. And then it accelerated, right? So it's the Fed being prudent. And this is what I like. They're being prudent because they understand that, yeah, we're getting some good data, but on the other hand, we've been head faked before. We don't want that to happen. So we want to be sure that we have a string of data that really tells us, yes, we're moving towards the Fed's target on a sustained path. That's the key. And then they can embark on rate cuts.
Are the markets still in good shape if we get no rate cuts this year?
Good question. Good question. Because if you look at the CME FedWatch tool, they're flirting somewhere between 1 and 2. I still think it's 1 with a couple more next year. That's
1 in September?
I know you well enough to know that that's a trick question because I don't think we're going to get any rate cut ahead of what is likely to be the most contentious presidential election. And I doubt very much that Powell and the rest of the Fed heads want to stick themselves into that. So I think, one at the end of the year. But remember though too, JD, that we're going to get a lot of data for June, July, August, September ahead of the Fed's November meeting. So it is possible that if we see, more progress like we've been seeing, or dare say deflation.
Not disinflation, deflation.
Deflation, right? Not inflation growing slower.
Right.
Deflation. If we happen to see that in some of the data, then it is possible that we could see the market get a little more comfortable about a November rate cut. But we've got a lot of data to get through.
Sure. We have a presidential election coming up later this year. How can we expect the stock market to react?
I think it's going to be sitting on the sidelines like everybody else, watching this potential, car crash of an election. And I say that because I think it's going to go down to the wire. I already said it's going to be contentious, but unless there is a clearly defined winner by a wide margin, I think like we saw last time in some other elections, that the true results will be dragged out. And that'll be a little bit of a market anxiety, but based on what we learn about who the eventual new leader is of the United States and what their policies are, not what they're campaigning on, what their actual policies are, then I think we'll be able to make a better sense about the market.
Donald Trump has referred to EV vehicle mandates as crazy. He has vowed to stop them if he becomes president once again. How should you position auto manufacturers in your portfolio, understanding this is such a politically fraught issue?
It's a great question. I manage the Street Pro portfolio, and I can tell you that we have no auto exposure in there for a couple different reasons. One, there has been a lot of euphoria, last year, the year before about EVs. Right? The concern that we had coming into this year was a couple. One, the consumer. What kind of shape are we in for a sustained movement? Two, we see a lot of the auto manufacturers outside of Tesla really investing heavily in their EV capabilities, but demand as we entered this year started to kind of taper off a little bit because of the higher price points. So that's a concern. And then the other one is kind of a chicken and egg, if you will, with EVs, right? I want to get an EV, but where's my charging station? And we heard a lot about the Inflation Reduction Act and the build out of a nationwide EV charging network. But where is it?
They've built like 7 out of 500,000.
It's utterly ridiculous. And on the one hand, you would say, well, okay, I understand that there's a process, right, for the funds being released. Federal down to the state level, and then designs and build out. But here's the thing. You can't build an EV charging station unless the electric utility is cooperating with you to lay the high efficiency cabling that you need. And what are they busy with? Data center demand. Mm-hmm. So, we saw all this coming, and, as a result, the Street Pro portfolio, we exited our position in Ford way early this year. And it turned out to be a good call on our part. Maybe at some point it might be worth revisiting some of the EV companies. But one of the styles I like to employ is what I call buy the bullets, not the guns. In other words, I like key suppliers of technology or key components. I like companies that are growing their dollar content per whatever it is, smartphone, home, what have you.
If the central bank does cut interest rates before the election, do you expect that
that's not a question.
Boost to President Biden?
So
that's not a question. Why? September's not on the table.
It's not on the table, but I'll humor you. If it happens,
and is it not on the table because of inflationary trends, or because they don't want to avoid the perception of being politically aligned?
Yes and yes. I think that the Fed's going to want to see enough data to carry it past that election point. But again, I also don't think that they want to step into that. The only way I could see a rate cut like that happening is if all of a sudden the economy slows dramatically, and then we'll have bigger problems.
Because then they're cutting for a different reason.
Correct.
I like your answer at first. You're like, that's not a question.
It's not a question.
The way, but that's what I appreciate in my interviews. Chris Versace, what would you do if you had $1,000 to invest right now?
So I'll give you 2. So 500. How about that? The first is a name that, and to be clear, we own both of these in the Street Pro portfolio. One of them is a company that is benefiting from the AI wave, especially regarding data center, but I also see it well positioned because the eventual upgrade cycle for AI on device, PC, tablet, smartphone, as that happens, we're going to see an explosion in data content creation consumption, pressuring digital networks. So for that, we like Marvell technology. The other one is, I just referenced my strategy for rising dollar content. This company is doing it with home builders. So it's kind of interesting. My view on the housing market, just real quick, is that if you look at the non-seasonally adjusted numbers, not seasonally adjusted, the non-seasonally adjusted numbers, housing starts, existing home sales, they're trending up. That's a positive, okay? But we're also that much closer to rate cuts that we were talking about. And as that happens, over the next, call it 6 quarters, mortgage rates will come down. They're already down lower than they were in early May, but I think we'll see further progress. And I think this will get some of the fence sitters into the housing market and help turn that up. So that's good in general for housing, but that increasing dollar content, company that is really leaning into value-added products, helping take the burden of manufacturing off the home builders, is Builders First Source, ticker symbol BLDR.
BLDR
Correct.
and MRVL.
Correct.
500 each?
500 each.
What company would you add to the Magnificent Seven to make it the Elite Eight?
Ooh, probably Qualcomm.
Why?
Because they are migrating out of really just being solely centered on smartphones into the PC upgrade cycle for AI. It's a whole greenfield opportunity for them. They're also building their business for chips and autos. And that is a long-term growth business, because a lot of people talk about smartphones or data center. But if you trail back over the last decade and look probably several years ahead, the chip content per car is going to continue to increase. So that's my Elite Eight.
How much of the current AI conversation is noise, and how much of it is actual signal?
So I'm going to answer this a little differently, right? Think of it in waves, not innings, okay? Think of it in waves. We're in the first wave, okay? First movers. You have to build the capabilities. So we're doing that through AI, through Marvell. We're starting to see things be launched, right? Whether it's OpenAI's ChatGPT, whether it's what Microsoft is doing, what Amazon's doing with its position in Anthropic, or Google is doing with Gemini, and even Apple, kind of what they're doing a little bit with Apple Intelligence. So we're only starting to see applications happen. I think the second wave is where it starts to get interesting, where we're not so much focused on the hardware and the chips enabling the capabilities, it's on the services that we're going to start to see. That could be companies like SAP, ServiceNow, and others. And to be clear, we own ServiceNow in the Street Pro portfolio. One of the reasons we did it is because they shared on their earnings call, they are already seeing a double-digit uptick in pricing for AI-capable solutions.
Chris Versace, the Chief Investment Officer at Tematica Research, thanks for taking the time. Nice to have you.
Always happy to do it.
My man.